Traders, how you doing? Tom here. I really wanted to do this video update. It's been a couple months since my last one, and I've been busy with things. But things are. I went through my scans this weekend, and it's obviously Sunday, November 6th. For those of you that are, well, I'll be on the date and timestamp on the video as well. But um, a sense of change is coming, and it's change is change. Control what you can control. There's things we cannot control. And what I find is there seems to be just a lot of general victimhood out there. People, pointing fingers and blaming. And the bottom line is you can sit there and be a victim if you want, but my philosophy is in life is stand up, take control. You have the ability to make changes to your investments in this. If we're just talking about this pertains to all things in life, business, relationships, all the rest of that stuff. But the bottom line is in your investments, you don't have to sit there and take it. I know people that are getting shellacked, getting crushed, wrecked, and I'll run through some of those charts today. I mean, it's a lot worse than this. What you're looking here is the SPY, the S&P 500 ETF, and you'll see we're down considerably. And you can see that here's the weekly chart in the lower left, the trend off the highs here that occurred right at the end of 2021, December 31st, beginning of 2022. And you can see we've just been in a downtrend here with pretty significant retracements. I mean, if you look at this, this is about a 50% retracement, and then you got a 110% retracement of this pivot move here before it came back down, 30% retracement, 140% retracement off this move here, and then another big move with a little pivot here. Now we've retraced about, I'd say about 40-50% of that move, and it looks like we're trying to actually at this point with the candlestick that we put in last week here on the weekly chart, on these 5 days here on the daily chart. This is the weekly chart here. You can see we've had that beginning move, and this of course was the FOMC announcement last week that people were anticipating more language of a pivot, and the language actually came out a little bit more pivot friendly. And then of course with the interview that Powell had, he distinctly said forcefully that really they're not considering pivoting anytime soon. My general approach is, now again, this is November of 2022, and I may be wrong. I'm not right all the time, but my guess is this is what's going to happen. They're going to stay with a strong language. They're going to do another raise, probably another 75 basis points. They will soften the language. I think what's going to happen is next year, maybe mid-year, maybe earlier, maybe March, April. They'll start going into the pivot. I think the pressure will be too high. I think with the debt that the country is accumulating, it becomes unmanageable if the interest rates get up to the 4.75% range, and we're kicking around 4 right now. So we don't have a whole lot of room to go. But obviously, there's a lot of, I think, nefarious activities going on. We're not being told everything. I think the reports that are coming out are not there. But if you just think about it from this perspective, interest rates are say 4%. Say you're getting 4% interest rates. Well, that means if you put your money in a bank, interest-wise for your savings account, you're not going to get 4%. You're going to get something less than that. Let's just say to be overly gratuitous towards you, say you get 3%. Well, if inflation's running at 8%, 9%, what smart person is going to stick their money in there and get a net negative 5% deterioration of their wealth? I mean, it's stupid. But people do it because they don't think about it. They just do what they're told. So don't do what you're told. Stand up, take control. There's the charts are telling me things here that I think, based on history, based on the nature of human beings, politicians in particular, as well as human beings in the Fed, and they need to be right, and they need to throw gasoline on the fire to protect themselves. I think we're going to get to a point of closer to hyperinflation than I wanted to go. In fact, that's the worst case scenario in my opinion. I think what's going to happen here is they're going to raise, they're going to talk tough, and when inflation doesn't change because the money printing is still going on, they're basically giving blank checks to the government, I think, to fund programs. I say, here's this little IOU in a hat you can owe us down the road, and what's another trillion off a $31 trillion debt? And it's going to continue, and it's going to placate voters because they want to get votes. And I think this is all going to come to a head prior to the next presidential cycle election in 2024. But I think what's going to happen is as soon as the market, so if those of you guys that are holding on to your 401ks and staying long and adding to your position, doing all the crap that worked over the last 15, 20 years, actually it worked, buying all the dips. Obviously, I think some of those people are getting scared. What's going to happen is I think we're going to get one more big push down. I think we're going to take out these lows on the SPY, and it's going to drain out people. And then we're going to have, once the pivot thought process starts to enter more into the prevalent minds, I think we're going to have a rapid, huge rally. It's going to be kind of like the tide going out before the tsunami comes in. It's going to be this period where the market's going to go ripping. Everyone's going to go, hey, good times are here again, and then the bottom's going to fall out when hyperinflation hits, and then you're going to want the hard assets. I mean, just go on, Google, YouTube. You can find all sorts of different points of view. Definitely keep your mind open. And I'm getting kind of long on my just discussion here of what I think is going to happen. But I think we're going to get a continued downtrend here, move for the next month or two, possibly a little bit longer. And then once things start to be sensed, maybe they're not even, because I was sensing it here with this move up prior to the FOMC announcement over the last 2 weeks, where people were sensing that they were going to pivot, and it turned out to not be the case. I think we're going to continue to go lower, take out these lows, maybe get something more cataclysmic to the downside, really drain out people, have people throw up their hands, and then that's when the rally is going to happen, when the pivot changes, when things get so bad economically that the Fed will pivot. We're going to get a rip up, and then when that happens, get ready, kids, because inflation is going to go through the roof. Speaking on that, let's start with the miners, the gold miners. You can see here pretty flaccid down here near the lows. Really, we've just been hanging since September, going sideways. Made a low here. What I'm seeing here is a possible reversal. I'm going to start nibbling into this position. JNUG, GDX. You can look at some of the other miners. There could be some more downside, and obviously, I wouldn't go. Nibbling is buying maybe 20% of position sizes for me. GDX is another one here where it's actually coming down to a sell area with a declining moving average, crossovers here. But I'm sensing that when this goes, if it goes, the golds, the miners, the silvers, the palladiums, the platinums, all these things, it's going to be hard to nab them, meaning it's going to be exponential. It's going to start moving quick. Much like some of the other things that we've seen, for example, Yang, which is a position I've been in and out of, completely liquidated all but about 5% of my position right here. And I bought back in a lot of those shares here off this massive gap down into this buy area on the daily chart, and you can see the support area here just below that, right here about 23.24. So I think that this was a pretty substantial move back down to take out these lows. I don't think this is going to happen again here. I'm looking for the moving average, maybe a buy in the low 20s, but definitely starting to nibble back in and looking for a setup here for this Yang to go back up, retest, and actually blow through these highs is what I'm thinking down the road. So watching Yang, the gold miners, the JNUGs, the GDXs, the GLDs, if you like it, you can see here also very strong. Peekaboo broke below, gap down below, green bar, gapped up here, blew through the resistance area. I think this could be higher. Again, not worth full positions in my opinion, but nibbling for sure. We'll have more opportunities to get in. You may pay higher prices for it, but that's the way of the game. That's how I play my game. I don't go all in on one shot. I take pieces and add as my hypothesis starts to play out in my advantage. UDN, dollar short, dollar bear ETF. You can see, look at the volume pops here. It's very similar to like these commodities here. We've been in a long downtrend. The dollar's been so strong right now. It's so strong overseas compared to the other cream of the crap in regards to world financial fiat currencies, as well as gold and silver. Gold and silver, the prices have been kind of static. They haven't really moved up. They definitely haven't moved up. They've been moving more down with a downward bent to them. But as you know here, if you live in the U.S., the dollar's been crap. I mean, you can't buy as much as you could last month with it, or the month before that, or last year, or that sort of thing. Inflation is out of control here, and I think it's actually worse than they're reporting. But this is where you want to be. You want to be nibbling into this position. So I nibbled in here on this gap down off the FOMC. Because hypothetically, the dollar should get stronger with increasing interest rates. But this is showing a decoupling, if you would, and cryptos I'm going to talk about as well. Things are starting to separate. Things are starting to change. Things that were running together, like the cryptos with the market, cryptos are now starting to show more strength in the market. The dollar strength is starting to wane, even though the market has been running basically down here with the market, right? So I think that this is definitely one worth watching, and I've already started legging into this position. And again, your stop obviously is below these lows here around 1650 or so underneath this low on the weekly chart, and you can see it's just been moving down this declining moving average. What I look for is you don't need to rush into these things like the gold. What typically happens is they don't just go straight back up. They'll go up, it'll oscillate back down, it'll just basically make a higher low and then a higher high, then a higher low, and you can look to get in there. Once you get a couple of confirmed higher highs and higher lows, you may be paying $18 for this instead of $17.38. But then you've got more of a confirmation of a trend change on the charts, which gives you more of a chance for a continued move higher. See a lot of these times where the things that pop up and then they just fall right back down. Like, see, if you anticipated this here, let me just back this chart up right here. Oh, look, volume, bottoming tail. Okay, this is the bottom, the bottom's in. Well, it wasn't, right? And it continued to move lower. And that's what happens is you get these false breaks higher, sucking people in and then getting shut right back out. So this is a perfect example of one that I'm legging into. I like what I'm seeing here on the daily chart. The higher lows here on the daily chart, a couple of higher highs. I think you can wait for more confirmation if you want or nibble like I am. But I think this thing is going to go higher in the long run. 1 year from now, in November of 2023, I almost guarantee this will be higher. Now, I don't have a crystal ball, and if it takes out my 1650 area, guess what? I'm liquidating my position. I follow my stops. And then I'll look at it, maybe I'll get in at 11, and it'll be up at 18 by next November. Who knows? But you just got to follow the charts and let them dictate where you enter and exit and not get married to your bias. That's the biggest failure of traders is getting a bias and being married to it and wanting to be right instead of being rich. If you'd rather be right than rich, then you're going to be poor. You can do that. Or you can just say, hey, the market's telling me something different. The river's flowing this way. I'm not going to fight the current. I'm going to go with it. Okay? So you've got to take that approach, I think, if you want to do this for a living. Okay, so quickly, let's run through a couple of the charts here. So we talked about the gold miners. Let's look at palladium. Palladium here, it's a very thinly traded issue. You can see it's had a big sell-off here. Here's the weekly chart, right? Kind of a tornadic position where we got higher highs and then a higher high, and now it's made a lower low, or it's actually made an equal low about here, 163, 164. I'd love to see it break 160 right down in here and look for this tornadic formation to just rebound off this bottoming tail here and move back up. It is not trending up. It is not trending down. It's kind of trending sideways. But I like this as a potential long watch idea. Stronger is gold. Let's just go to IAU, which I own. You can see the big, I tweeted about this on this day that I was nibbling here when it gapped down off the FOMC, and it was a really nice return in a day, over an overnight position, right? Again, on a weekly chart, it's in a downtrend. On the daily chart, it's in a downtrend. So why am I buying it? Because I'm looking at the signs that the candlesticks and the volume has given me, and I'm thinking this is a better odds that this is going to be a bottom. But I'm not going to be belligerent and hold on to my position if it takes out these lows. I'm out. And then I'll look to reassess and get back in. So gold is strong, but you see now there's gold. Let me go back to palladium. Look how palladium is weaker, right? Look at platinum. Platinum is actually pretty strong. Look at this. Look at the move up on the weekly chart compared to. Hold on, let me go back to gold. See, gold, platinum. Platinum's stronger. Silver is stronger. Silver and platinum look like the places to be if you're playing relative strength. Look at the silver, big bullish candles, gap down. So on the FOMC, it wasn't even breaking like the gold. And those were gapping down to lows, right? This only gapped down to this pivot here, which is a higher pivot low. Silver looks like actually the winner in this race right now. It looks like the strongest of the ones I've just mentioned with regards to, these metals. Okay, so keep an eye on silver. You can look at your Wheaton Precious Metals. Newmont Mining, you can look at these. They're popping here. They're doing very similar patterns. They all kind of trade as a herd, obviously, because they're in the same sector. You can see Newmont actually came down, broke the lows, and it's turned around here. You got a possible failed breakdown. It's an extended move down, but we have been basing here for quite some time. So this could be a reversal. I don't own this one right now, but I'm looking to get into this one. This is another one that I'm watching to trade. Some other strong stuff to consider. Some of the defense stocks, Northrop Grumman here pulling off these highs. Nice uptrend on the daily chart, looking really good. Vertex Also very strong. Here's the weekly chart, the daily chart. You've got a red bar followed by a green gap up, basing higher low here. See if this low. You got a good line in the sand here, about 303 for your stop for a breakout above here on Vertex. So keep an eye on Vertex. I think these are the ones that are going to run if what I think anticipating is going to happen, and the Fed does pivot and stops raising rates. Slows it down, then of course stops, and then maybe possibly even reverses because the market, the economy's gotten so bad, and the people in power want their power, so they need votes. So they're going to reverse it and damn the long-term thing and screw hyperinflation. We'll just deal with it if and when it comes, and it'll come. But things like this are going to rip, I think. Vertex, pretty much everything will rip, actually, if they reverse, I think, for some time until the realization comes in. And I think some people, smart people, you can see what's happening on some of these metals, is I think people are starting to leg in like I am, starting to see that the writing's on the wall. The inevitable will be coming, unfortunately, and we'll figure out a way to get through it, but it's going to be painful. Lockheed Martin here, very nice, very strong. Look at this big move back up. Another one worth considering watching on the long side with all the war talk and strife going on in the world. Here's one that I owned. I got stopped out of for a little bit of a profit. Not bad. It's pulled back here. It's holding up. You can see it's coming up to the rising moving average on the weekly chart. The moving average is rolled over on a daily, but I'm interested in this. It's kind of wide and whippy, so I'm just got it on radar. There's no entry and exit point. I'm just giving you stuff that I'm watching to keep on watch. Cardinal Health is another one that's very strong. See the daily and weekly charts. Caterpillar is strong. This one is really moving back up now. It's up near resistance after a pretty pronounced move, so I wouldn't be buying it probably the next week or two, but keep an eye on this one. It's showing a lot of strength compared to the market. Let's see, what else? Schlumberger is also very strong. You can see here a high flag forming. Weekly chart supports it. It is up quite a few weeks, but it's in the clear air to the left. It's got no resistance points. Schlumberger looking like it could really run. Eli Lilly, one I owned and took profits on. It's actually looking to set up here another one, flag set up here on the daily chart, weekly chart. Schwab is ironically strong. A lot of these, Goldman Sachs has had a big run. Schwab's another one here. You can see basing. It's got some area to move above here. You can see a kind of a flag pattern setting up here on the daily chart. Schwab's definitely worth keeping around. General Dynamics is another defense stock that's also very strong. Keep an eye on that one. And let's see, Rambus, very strong, extended, no buy point here, but just keep it on watch. Eaton, big move up here. STRL, which is Sterling Infrastructure. So the new one that came on my scans, you see the pretty pronounced move up here. Now it's not worth buying. Obviously, it's too extended. But give it a week. Maybe if it bases out here, gives you a flag type setup. This is one, I don't know what's going on with the stock. I haven't researched it. I don't know what they do. But the charts show me that this thing has got some upward momentum, no doubt. And then APD is the last one I'm watching off another aggressive move here past the pivot point. So look for a setup up in this area. Short side stuff. I think Tesla is going to fall apart. I know a lot of people are anti-Musk and whatever. I just let the charts tell me what I'm doing. You've got a consolidation here about 4 weeks. It's kind of messy here on the daily chart. But I shorted this thing up in the 300s, took profits on the move down. Very nice. And I think this is going to, I'm going to re-enter short again if it breaks under 200. I think this thing's got nice downside potential. You can see the chart here to the left. If you go back up further enough on the weekly, there's a breakdown around the 150. It could break down to quite easily with all this overhead resistance too. So if the market takes another move down, I think this one moves from 200 to 150-ish would be my target. Obviously, you got to make sure your reward to risk was worth it, and I use the daily charts, really not the weekly charts for my entries and exits. But Tesla's worth watching on the short side. I think Macy's had a big pop up there. I think it might be coming back down. You can see the weekly chart. You've got kind of a double top here off the moving average. It could come back down, and I think this one, especially if there's another move down aggressively closer to the end of the year here, this one could move nicely to the downside on the short side. All right, now let's go to the crypto market here real quick. You will see that this is Bitcoin, a 4-hour chart. You can see a beautiful flag with declining volume setting up here off this 4-hour chart. And it doesn't matter. You can go to a 2-hour chart and you'll see a very similar thing. right? There it is right there. I went to a 4, or we can go to a 6. Let's just do a 6. So you can see to the left the resistance and the smooth move down. Really, if this can break this flag, my target would be the $23,000 area on Bitcoin, and then 25 is the next. Again, I think if the pivot happens, or anticipation of the pivot happens, in addition to the metals running, oils, a lot of the commodities, I think the cryptos are gonna run. I know there's a lot of open questions around the impacts of possible regulations or lack of, and so you got to keep all that stuff with a grain of salt. And again, it's more of take it all with a grain of salt. It's all got to be based off of what your personal investment plan is, and asset allocation and diversification of your assets. Obviously, you shouldn't be 100% in cryptos, nor should you be 100% in markets or in anything. For example, you've got to have a nice distribution and figure what that out is for you and your financial situation. But let's go up to the daily chart now on Bitcoin. And you'll see here, I mean, it's so crushed, right? But you see here on the daily chart, we've got a possible continuation pattern setting up a 1, 2, 3, 4 type of situation. And you can see here 25,000 is the next resistance point. And then beyond that was a nice clean fall from about 32 down to this 20 area. So again, if you're a trader, I think you trade this area here for a nice move. You conservatively, it's 23,000. A little more aggressively about 25, and then ultra aggressively if you want to give it a month or so, go for the $30,000, $32,000 mark. But I think this thing looks like it's going higher. I think it's bottoming. I had orders in here underneath at 12, 11, 10, 9. Hoping that on one of these weekends when the volume's light that there'd be a panic and people would sell their Bitcoin off and I'd be picking it up down at those cheaper prices. But it hasn't happened yet. Those orders are still there in case something like that does happen, because I believe in this thing long term. I think this thing's going to go, and I think it deserves consideration for part of your portfolio, no doubt. All right, I'm expanded my chart here so you can see some of the other things that I'm watching. Where is the other? Well, we'll just do the big one. So we just did Bitcoin. Let's go to Ethereum here. Okay, so Ethereum here on the daily chart, you can see a very similar type of setup to the Bitcoin. Again, you've got possible here. Let me move this in so you can see the price points here. There we go. Oh, now we lost our side over there. That's okay. So you're looking at move. The next resistance point is around 1,800, then 2,000, and then beyond 2,000. If we can break above 2,000, you got a decent run here, about $2,900, which is a great return on percentage return. And I like it. And I'm in these positions. I had sold out of a lot of them. I've been building up small positions back into these and looking to add to positions on breakouts here, like I'm explaining to you. You can look at more of the 4 hours. Look at the 6 hour chart and see what it looks like. We just looked at the Bitcoin 6 hour chart. You'll see a similar type flag setting up here on the 6 hour chart with a target here around $1,800. So you got a $200 target. Of course, you got to hit the flag. So the entry point wouldn't be till about 1650-ish at this point. Your stop would be under wherever the flag bottom is. At this point, it's what about looks like 1604, where it is right now. And then your potential first target would be around $1,785, $1,800 per Ethereum coin. Now, last but not least, certainly not least, are the two that I own. Now there's been other ones that have been strong, but these two have been a lot stronger than Ethereum and Bitcoin, for example. So Matic here, which is the Polygon network. So let me just find that. Well, there's the symbol right there, but you can see it here. Matic, Polygon, $1.17 right now. You see this pretty nice move up. Let's back the chart up here on the 6 hour. Let's just go to the daily. And you see a pronounced move back up here into this void to the left. And if we go, let me close this down again here so we can see the price points. You can see that really it's got a clear path to run around 150. And then there's some resistance and clusters to the left around 150 up to 180. And then on the daily chart, obviously the all-time high here is around $3 a share on Polygon, on Matic here. But I think I like this long term. But if you're a trader, look to take some profits in this area here. If you're not in this and you're looking to, well, now's not the time to be buying it. Look for a setup. Look for a flag type setup here, a base and a breakout. If you want to play a minor pivot, you could obviously, if this daily candle stays really small, you could buy the higher the candle, stop whatever the low of this candle is, because you can see it took out the low of the previous candle. So that's kind of called a minor pivot play. But obviously, this a lower odds play, and there's a good chance you get stopped that with a stop that tight. It's easy to get picked off. So keep that in mind, especially on some of these ones that have a little bit lower trading volumes. And then on the weekends, when anything can happen, when the volumes get really light, it can be a problem, and you can get snipped. So that's why I like to play that game the other way instead of complain about it and bitch about it. I was like, screw it, I'll be a part of the solution there. I'm just going to throw in random orders beneath where those stops would be, and just try to get them on the cheap on those weekends. I use it to my advantage. Of course, my thought process and my bias on these is generally higher, so I have that bias, and I go to market with that. Matic, and then Atom's the other one. Where is that? Atom. There's Cosmos. Down 4% in the last 24 hours. So you see the daily chart here. Compared to the other ones, it's not as strong as Polygon, but it is stronger than Bitcoin and Ethereum. And it's moving its way back up. It's got more closer resistance here around 16, 17, about $17 a share right there. Well, let me bring the chart in so you can see it again a little bit more. There we go. Around here, around 17. But if it can break past that point, or if it comes up here and gives me a base, hell, I'm adding to the position. I think, you've got a clear path up to about 32, which is a double off of the 16 point. Not bad, 100%. And it could be in a matter of, a month or 2 months. I think it could be very, very symmetrical to this move down on this side, especially if things start to get more pivoty with the Fed kids. So keep that in mind. And like I said, I don't think that's happening. The pivot stuff isn't happening. There's another meeting coming up in December, but I don't think that's going to happen really there. But you never know. Could. If that happens, then I think this thing goes back up to 36, no problem. If it doesn't, it may wall around here. It may give you a couple opportunities to buy it cheaper if it bottoming tails out to the downside. So keep an eye on these ones. These are the ones I actually own all four of these. Atom, Bitcoin, Ethereum, and Matic. And looking to add to positions again, just looking for chart pattern setups to add to position based on my longer term thesis. So I think these are going to go up because is again, what does it compare to? The dollar. And if you think like me that the dollar is going to go down in value, you say, oh well, we're already getting crushed with inflation and they're increasing rates. It should be getting stronger. And I was like, I don't know. I think what's happening is the cream of the crop. People are moving their rubles and their yen and their pounds and their euros into dollars because they're getting better rates of return and the inflation here is a lot less than what they're experiencing there. So they're basically just cream of the crop type of situation. But when they realize that we've been doing the same tricks and doing the same games and the same money printing that everyone else is, maybe not the same volume, but to enough volume to where it's going to damage things. It's going to damage the volume. It's just paper that they're printing. Actually, I just saw a video where it's saying it's really not really printing. What they're doing is just going into the bank accounts of the governments, commercial banks, and basically if they have $1 billion in there, they're just adding a zero to it. So okay, we'll just put this little IOU on this piece of paper in this hat. You can just pay us back later. But now you spend that on whatever you need to get more votes. Is how I'm reading what's happening. So anyway, that's my approach. These are all the ideas I have right now that I have cooking, things that I'm in, things that I'm considering getting in, and I want to share with you. And again, take the power. You got it. Okay. Don't sit there idly and not make any decisions for your own benefit. You have the power to make changes, control what you can't control the government. You can't control who gets elected other than voting for yourself. There's really no control over the Fed, what they decide to do. You can only control your reaction to it and think about what you anticipate is going to happen. What I like to use is that, coupled with the charts to tell me what's going on and give me objective places to get in and get out, and not asking questions going, oh, you know what, I just need to be right in this situation. I'm not going to take my stop. No, I'm going to get out. I could be just going on the complete other side of things. I could be completely wrong, and the dollar could be the strongest thing in the world, and people have so much confidence in it, even though we've been printing billions and trillions of dollars and spending it on things and to prop up the market through you know, the lockdowns and all the shutdowns and stuff that happened over the last couple, 2-3 years. Um, I could be wrong. The gold could be worth crap. Silver could be worth crap. I don't think so, but it could be wrong. But the charts will tell me if I'm wrong. And if the charts tell me I'm wrong, I'm not going to say, nope, nope, I'm right. I know this is going to happen. I will get out, but I will continue to reassess and get back in. Okay? That's the key. You got to follow your plan. Otherwise, you're just blowing in the wind. You're guessing, and you're um, pretty much gambling. And that is not something you should be doing with your nest egg. All right, guys, until next time, trade well, trade safe, take action. And hit me up if you have any questions, comment on the video, or shoot me an email. Have a good one.